What's going on, everybody? Let me know if you guys can hear me or see my screen. I just want to make sure that all my settings are right and that you can see my screen and my voice is clear. So we'll get started in about 1 minute or so. It's Wednesday, 12 p.m. is where I have my live session starting at. So I just want to wait a second for some late stragglers. How's everyone doing? Where are you guys from? And who all is in here? Let me get a show of hands. Where are you guys from? How long you've been in crypto? I just want to know my audience, know who I'm talking to. What's up, Naseem? Bitcoin Guru, MD June ID. What's going on? Oh, fans from India, Bulgaria, Canada. Oh, nice. Awesome. Diverse audience. I used to live in Canada when I was younger, when I was a little pup. I used to live in Toronto, actually. So Australia, I've been to Australia. Love it. Netherlands, what's going on? I love Netherlands as well. I went to Amsterdam, I think, in 2016. One of my best trips ever. Been in crypto since 2017. Nice, nice. You've been watching my videos since 2019. Naseem wants to build his long-term portfolio. Yeah, we could definitely talk about that today. We're going to talk about a lot of things, short-term and long-term. You know, what's happening in crypto, what Goldman Sachs talked about in terms of Bitcoin and crypto. Who else is here? Where are you guys from? USA, UK, Netherlands, Australia, Canada, Bulgaria, India. All right, all right. I love it. Love it. How's Colombia? Man, Colombia is amazing. For those of you who don't know, again, my name is Amal, and you know, I've been trading for about 11 years, and I think in 2015 or 16, you know, I built up enough capital where I realized, okay, maybe I could do this full time, but I wasn't fully ready. I still had my consulting gig on the side where I do tech consulting. And then eventually, I think around late 2018, I finally took the plunge of, you know, becoming a full-time trader. But again, that was a good 10, 11-year process, you know? And, you know, I'm, again, not anyone who got rich overnight because of crypto or anything. I had to learn the hard way of blowing up multiple accounts, whether it's FX or whether it's trading wheat or oil or corn or equities, you know, back in 2008, 2009. And then, you know, also trading crypto in 2016. So these are all, you know, lessons that I've learned over the years, over the last decade. And, you know, I'm here to sort of share my lessons with you guys. And, you know, everything that I do in this video is not going to be financial advice. It's just my opinions on the market. Sometimes they're right, sometimes they're wrong. And so I hope you guys like it, all right? So let's get started, all right? I will cover all the questions after, so hold off on the questions. If you have any questions regarding what I'm going over, then you can ask. But if you have something, you know, like Matthew asked a question about XLM, you know, long terms, whatever, hold those off till the end, all right? So let's get started. Okay, so on the 1 hour chart, remember, I think yesterday or 2 days ago when I did my video, I told y'all that there was somewhat of a head and shoulders pattern that was developing on, you know, this particular time frame. So it could have been something like this. There was your left shoulder, your head right down here, and your right shoulder developing, right? Unfortunately, that didn't break down. Instead, we actually broke up and outside of this wedge, okay? I told you guys that if we actually get a big breakout of this wedge, from this wedge, okay, with high volume and continuation, if you want to simply do a target based on this wedge right here, you could look at it from the broadest part of the wedge, okay? That's how you do measured moves. So we broke out of here. So our target should be about 99.78, okay? Now I'm gonna tell you guys some of the reasons why I don't think that we're going to reach that far. And I'm gonna just tell you guys via technicals, so not even my opinion. I'm just gonna show you on the chart exactly, how I'm going to look at the current positioning of the market and how I'm going to play it. Okay. So first things first, what you guys need to know about myself and our community is this is the Alpha Trades Advantage community. All these locked channels that you see is for the paying members. You can go to our website right here, Cryptosomniac, hit the products page right there, buy the Advantage subscription, and then you get access to all the locked channels. All right. So one of the tips that I've told people for several days now, okay, is that we have been short from way the heck back here around May 13th. Okay. So that is from way back over here in this area. Where's May 13th? So right around here, we've been shorting all the way up. All right. And then even over here, some of our Advantage members got to take shorts, and they're technically doing a lot better than I am, because I think my average short position right now is like $9,200. And so right now I'm just about break even, right? I could have taken profit here. I could have taken profit here, but I didn't want to, because this is actually a swing position for me. And for those of you who don't understand the difference between, day trading positions, intraday, or swing positions, your swing positions are really your larger time frame positions, that you think that, maybe something that you could ride out for multiple days, multiple weeks, sometimes maybe even multiple months. Okay. So I'm taking this swing position based on a couple different things. Number one, I had stated that in this whole thing right here, I did not believe that this was going to be a continuation move to the upside. I believe that all this kind of movement, volume coming in at the tops right here, even the kind of distribution that was happening, for the most part, I did not want to, get into a long position right here. I warned our Advantage members numerous times. And if there's any Advantage members watching this right now, you can let the people know in the chat. Now, I warned people numerous times up here that this is more than likely a top. And then obviously after that, we made a deep slide all the way to about $8,600, right? So fact of the matter is, what we're seeing right now is a movement outside of this triangle right here. And, if we take the breakdown from this triangle and from here, okay, so from here, we take that measured move of that triangle. All right, so we broke down from here. That should target us somewhere around $7,000 or so. Okay, so 7,025. Don't take me to an exact figure, but that would be the one big target that you should be looking out for when it comes to this bigger triangle breaking down. Now, if the case was that this big triangle broke up, I would have said the same thing. I would have said, okay, well, let's take that measured move from here down here, and then let's put it at the top whenever we broke out. And then we would have taken that shot to about $11,700 or so. All right. But the fact is, we didn't do that. Okay. And there's many reasons why we didn't do that. Okay. So number one, the triangle itself, in terms of basic technicals, broke down. But before that, there was other signs in the market that we were looking at that was already showing us that the volume at the tops of these ranges right here, or even if you take a look at Trading Light, which is a software that monitors L2 data, which is order book data. If you looked at this data right here, a couple of weeks ago when we were looking at it, overwhelmingly what you would have seen is these kinds of walls right here. See this right here? These are previous walls. These are previous sell orders, basically selling or pressuring price down. Okay, so if we keep going back all the way to 9,800, 9,900, look at these sells right here. These are all $10 million, $9 million, $13 million sell walls. The brighter the color, the bigger the number. All right, so look right here, even up here, right around $9,900, and let's zoom into it, right? So if you guys don't believe me, okay, let's zoom into it. All right, so look at that. This was a $6.59 million wall. That's after it got wicked. So for all we know, this could have been a $10 million wall when it was over here, right? All right, so going back further and further, again, sellers stepping up over here, driving price down, sellers stepping up all the way back here. So for the most part, what I've discussed is, volume analysis had shown us already that price itself was looking a bit toppy. okay, because of what was happening in the L2 data. And on top of that, the momentum itself, right? The momentum oscillator is right here. Okay, you could see higher high in price right there, lower high in RSI. Even over here, big drop and a pretty decent spike in volume right there. All right. Aside from that, we had a volume divergence too, which again, volume divergence is, pretty decent higher high in price, but lower volume for that higher high in price right there. Okay, so people talk about that bullish and bearish divergence on oscillators. I not only pay attention to that, but I look at OBV as well as the volume analysis for the volume divergence. All right. All right, let's check the chat here. Let's see what's going on. What's up, Timeless? How you doing, man? It's been a long time since I've seen you. I see your analysis on Twitter, man. It's awesome. I'm really happy for you that you're getting the recognition for the smart individual that you are. So really happy to have you watching. What's up, Eduardo? Bittersweet Brawl. What's up, Headhunter? All right, so again, going back, all right? So we took a short based on numerous reasons for the volume analysis that I showed you, the L2 data that we were looking at, and then on top of that, the whole halving event itself, right? You got to be able to have some common sense. And I don't mean that in a derogatory, mean way, but when you see an event driven movement in price, and in this case, it was a halving event, you should be careful in knowing that, okay, well, literally everyone and their mother and their grandmother knows about Bitcoin halving if they are trading Bitcoin, right? So for the most part, in some way, that news is going to be factored into the price, all right? This goes back to even the equity markets, right? I mean, when price is aggressively moving up, before a big news event happens or, a new product is unveiled or a new partnership, that means someone knows something that you don't. But in some cases, right, especially of Bitcoin's case, everybody knew that, the halving event was going to come up, right? May 11th, whatever the date was. And so for the most part, all you really had to do was kind of wait at a particular area of significant resistance. And you just wait there, let the FOMO die out, watch the real sellers step up, and then you just short. All right. So over here, having a short bias or a bearish bias up here may have hurt or made you look like an idiot. I know I looked like an idiot for a while when I was shorting. Okay. But then after that, once prices started to go down, everybody was like, oh shit, Bitcoin's a scam and this and that. Right? So this is the problem with most people who haven't traded for a while is they don't understand the dynamics of how markets operate. Okay, the price will already make a move if it's a news-driven event well before the news even hits your ears. Okay, same thing when it comes to bigger selling or bigger buying that's happening. Price has already escaped away from the optimal entry points for your shorts or longs before you can even think that, oh, now it looks bearish or now it looks bullish. So you got to have some cojones, right, to be able to pull the trigger in areas where you just think that, all right, I'm calling a bluff on this. I'm calling a bluff on this rally, and I'm going to short the market or long the market or whatever. Okay, if you truly want to be a successful trader, you must be willing to take calculated risks, right? Again, this is not me telling you that, hey, go out and take risks all the time. I'm not going to give you that kind of advice. I'm just here to tell you that me shorting up here was the sole reasoning of me being convicted in my analysis and opinion, having conviction in my opinion that, well, the volume analysis is showing us we're topped off. The RSI analysis is showing us that we're topped off. The trading light, L2 order book data was showing us that we're topped off. OBV data was showing us that over here, right, when we made a high right here of 94.81, we made a 10,085 high of a $600 move, yet the OBV barely moved. So that means that the inflows of money are not really present to warrant this high of a movement in price. So these are the things that you want to pay attention to as you become, a trader in this field, or just being able to identify the BS from, the truth, right? So aside from this kind of information, right, there are other data points that were pointing out to the fact that we are looking a bit toppy. Okay, so if we go down into the 4-hour time frame, right, I guess that data disappeared. It'll come back in a second. All right, so if we go into the 4 hour or the daily time frame, you could see this, the hash ribbons right here. Again, this is now showing that the capitulation is again coming in. This is your slower moving average, your SMA, and your longer moving average now making that bearish flip, right? So again, another indicator showing you that based on the mining data that's coming out, okay, prices for the most part are not sustainable up here for a majority of miners. All right. So fact of the matter is, hash ribbons right here are already showing you that miner capitulation is coming in. Again, this is not some random indicator that gauges tops and bottoms. This is an indicator literally developed on the sole idea of how are the miners doing based on the hash rate, based on the level that price is at. Okay, so these are solid indicators. Same thing with this indicator right here, which is a CME COT data. So COT data is the Commitment of Traders report. All right, so you can see right here, Commitment of Traders report was already showing us that price kept inching down. Open interest was actually going up. Okay, so if you're not familiar with that, when price is going down, open interest is going up. That means in the futures markets, there is more likely people who are shorting or entering more shorts. All right, the other pieces of data that were more informative were that non-reportables, which again are your average, professionals or some individual investors, they're actually more net long versus your non-commercials down here, your hedge funds and your institutions are increasing their short exposure, increasing it. So who do you want to follow? Do you want to follow the average person who's buying and selling on the CME exchange, or do you want to follow the hedge funds and the institutions who have significant amount of money, right? So again, I've listed you many examples of why, for now, you can look at all these data points and see that there's much more of a case to be bearish over here, even though I know everyone and their mother out there thinks that from here, we're just going to keep on going up. Okay. And I stated that, yeah, it's possible we could go up. I just don't think it's likely. Okay. I just don't think it's likely. Another way you can look at this is you could see there's maybe a hidden bullish divergence. So you have this, higher high right there, or I'm sorry, a higher low in price right there and a lower low right there in RSI. Okay. This actually needs to confirm with the daily, closing up higher. All right. Until then, this is an unconfirmed hidden bullish divergence. All right. But again, here's the thing, right? Overall, the volume going up. Okay. And by the way, you can go check out my Bitcoin roadmap to 2025 video. Some of the analysis that I'm about to do right now is actually in that video. So if you don't have time for that or you want to rewatch it, you can go check it out in my Bitcoin roadmap to 2025 video right here. All right. So going back to the analysis, right? What you see overwhelmingly is price, was pushing up and up and up. But overall, all right, let's see here. Okay. So overall, volume was going down, way the heck down. All right. But then guess what happens after? You see a big spike of volume. Guess where? Literally at the top. See, here's the thing about volume. Okay. If you want to see true bullish movement and solid momentum from the bulls, you want to see good buying volume right here and volume increasing and increasing as the candle spread gets bigger and bigger on the way up. Not this and then big spikes of volume right at the top. This implies that there's more selling happening up here than there is buying. Okay. And I'm going to show you guys another reason why. Okay. Let's go to the the monthly chart. Okay. Here's the monthly chart. All right. This is your previous monthly candle of April. April, the price opened at 6,425. The price closed at $8,627. So about a $2,200 spread in this candle. And look at the volume, right? You could see the volume right there for this candle. May, you have a price opening at 8,627, and right now the price is at 91.74. So that's a $500 move that we've effectively moved in terms of the body of the candle with higher volume. That means in this case, you can imply that there is much more absorption in terms of sellers, right? Or rather, I'm sorry, absorption of buyers into the sellers than there was previously. So that means the buyers are actually getting exhausted right here. And the sellers, if they pressure this price down, let's just say by the end of the month, so we got about 4 days and 7 hours to go in this particular candle. So if by this candle end of the month, we see this candle closing as is or even lower, that means this is a very bearish candle. That means more than likely we're probably going to see a reversal to the downside. And people talk about, oh, well, this was a bullish engulfing and, I think this might just be a pause. Well, let me show you the last time we saw a bullish engulfing. All right. And guess what happened? Okay. So look at this level right here. All right. This is October 2019. This is when we had that Xi Jinping, big China bullish news. And then again, the following month we dumped, December we dumped, and then January we made that big push up. We closed slightly above that marker, which was 91.53. But then February, boom, we got rejected literally in the middle of the month and the end of the month. And this price went from a high of 10,550 to a low of 84.38 and actually closed at 85.31. So it closed $2,000 lower, this candle right here. So beginning of the month, this might have looked great or maybe even closer to the end of the month. But then February was very bearish in terms of its close. And then March, you guys know all that happened, right? So this is what I'm saying. Okay, so let's draw this back out over here. Same thing right here, right? We pierced towards these closings and openings of these candles right here, okay, with this candle, but then again got rejected on this May candle that you're seeing. All right, so if we close lower or even if we close as is by the end of the month, and then the next candle looks like it's starting to become bearish, it's going to be a rough month for the month of June, okay? And here's another way you can look at this, all right? If you look at the 4-hour time frame, here's the May monthly open right here. We are so close to the May monthly open right now. We already tapped it as support, moved up, and in this larger triangle, we're now testing that triangle resistance line right there, or I'm sorry, the trend line right here as resistance. So if we start rolling back over, and if we break through this monthly open, it's going to be a pretty swift slide, at least down to about $8,000 or maybe, 7.5, 7.6 level, which is the consolidation in this triangle right here. All right. Now you're probably thinking that, okay, well, for now, I think I'm okay with being bearish, but then, what do you do for the steps ahead? How am I going to look at the market for the next few weeks, few months? Okay. So here's the thing. All right. Faisal and myself, so Faisal is our equities analyst right here. He does daily updates in the equities side. And the one thing that Faisal and I agree on is the market just seems like it's very overextended to the upside. This is equities, by the way, okay? So the reason you want to pay attention to what's happening in the equities market is because Bitcoin has been heavily correlated to the equities market, especially the S&P 500 and especially the ES, which is the S&P 500 E-mini futures, okay? This morning, we actually took an intraday call of an option right here. I want to show you guys this real quick. Again, this is what we do in our community on a daily basis. So I told my community that, hey guys, I'm going to be looking to get into a call option right here once the ES, or I'm sorry, the SPY starts breaking below this level, all right, 29.87. Okay, so we broke below that, all right. We smashed down all the way down to about 29.70, and then we started to climb back up. And I told my community that we're looking to take profit, or I'm looking to take profit for this option call around 3,000. Okay, so you can see right here, guess where we are, right? On a 1 minute time frame, guess where we are? We've been hovering around that 3,000 level for the last, 20, 30 minutes or so. All right, and so this is the profit that we took on our option call. June 8th was the expiry, 300 was the strike, and then we made 18.5%. And by the way, This isn't your piddly 18.5% on like 100x leverage or 10x leverage. This is unleveraged. So I made 18% in less than 2 hours on my entire position. All right. And this is the kind of information that we put out for our community. And again, we can't definitively tell you to buy or sell because we can't provide financial advice. But the best we can do is show you how we day trade this market on a daily basis. And by the way, all our winners and losers are here for you. Here's a loser for you, -5%. Okay, here's a winner for you, 21%. Here's another loser for you, or actually, where are the losers? Trying to find the losers. Here's -79% on that position. All right, here's, let me see here. Here's 360% on this position. All right. So, this is the kind of information that we provide for our community because we're showing you guys how we trade the market on a day-to-day basis. So again, how does this translate to Bitcoin, right? To Bitcoin, the way equities move going forward is how Bitcoin is going to move going forward. But here's the interesting thing that I don't think a lot of people believe me, which is that Bitcoin is a high risk, speculative asset, and it's typically more so utilized in a risk-on environment, meaning that when people feel comfortable that they want to dabble with their money into risky assets to seek more yield, meaning that, okay, well, maybe it's the stock market or the average basket of ETFs might give me 4 or 5% or 10% on a monthly basis. That's not enough for investors. Sometimes they seek maybe higher returns. And so they dabble into a high risk asset like Bitcoin, right? Which could guarantee maybe on a month to month, rolling basis, it could be 20%, maybe 40%, sometimes, 60%. So Bitcoin thrives in environments where, risk on assets like Bitcoin can do better because of the overall sentiment of the market is better, meaning that the S&P 500 is having a lot of inflows of money. Stock market overall, whether it's the NASDAQ or the Dow Jones or, tech stocks or biotech or whatever overall are doing better. And so Bitcoin benefits off that larger liquidity that's out there where investors are seeking for yield. Okay. So here's the thing. Here's the caveat to that. I want you to pay attention to this marker right here. Okay. So this is February 13th, 2020. All right. This right here is the top of the S&P 500. Let me see here. Top of the S&P 500 right here on February 19th. Bitcoin topped 6 days before and started its rollover before the S&P 500 started its rollover. Okay. So I have this theory of, how because Bitcoin is largely bot or algo driven, I would think that investors are going to want to get out of Bitcoin well before they want to get out of equities. Okay, because Bitcoin, because it's such a low liquidity asset, right? They want to be able to get out of their position in a larger distribution-like pattern versus the equity markets, right? I mean, you could sell, $5-10 million in, as a market sell, and you won't impact the market at all. But you sell, 10-20 million in the Bitcoin markets, and you're going to impact price quite a bit. You're going to have some slippage. You're going to lose a lot of money on fees and slippage because you're selling market. That's not the case when it comes to stocks, right? So point is that I think Bitcoin in some way leads the S&P 500 when it comes to the cycle tops and the cycle bottoms. So let me give you guys an example of the cycle bottoms, all right? So Bitcoin, or I'm sorry, the S&P 500 right here bottomed on March 23rd, okay? Guess where Bitcoin bottomed? Bitcoin bottomed right here on March 13th, 10 days before. 10 days before Bitcoin bottomed and 9 days before or 6 days before, I think, Bitcoin topped. So what does that tell you, right? So that tells me, at least, that over here, if I'm right, and if this is a top, that means maybe this is also the top for equities. Again, this is my own random theory that I've just been testing out that, here's something that I do on the weekends. I see Bitcoin the way it moves on the weekends, and I just, just as a self bet against myself, I say, all right, well, Bitcoin dumped, 5% over the weekend. So I would figure that the stock market, let's just say the S&P 500 index on Monday is probably going to open with a gap down of -1 to 2%. And more often than not, folks, that's actually been true. Okay, that's actually been true. There are many cases where it hasn't, but there's been few cases, numerous cases where that's actually been true. So it just goes to show that my random theory of, maybe Bitcoin, because it's a high risk asset, it may dictate how the overall markets are going to start rolling over or pushing back up before, the other markets even sort of do that. Okay. And that's again because this is such a bot and algo driven environment. All these high frequency traders, the way they utilize their algorithms, a lot of this movement is based on horizontal support and resistance levels, Fibonacci retracements. It's based on key SR levels. These are all things that are already factored into these bots and algos. So you then know that, well, if Bitcoin is coming to a critical resistance and the S&P 500 is coming to a critical resistance, and if Bitcoin starts rolling over, well, maybe the S&P 500 should start rolling over too. Okay. So let's see some questions here. Spit It Out says, I think you're reaching a bit farther, but it's interesting. Yeah, again, this is just my random theory. I'm literally spitballing. And by the way, like I showed you, I'm not spitballing with, just talking out of my ass, right? I'm actually trading the market on a day-to-day basis, showing people that here are the trades that I'm taking, whether it's the FX markets, whether it's the equity markets, or whether it's crypto. Okay, so the one thing that most communities don't show you is that, hey, here are the trades that I'm actually taking. I'm not going to show you exactly how much money I'm taking into each trade. I mean, I think that's a little too much, but I'll show you guys exactly the position I'm taking, right? On a day-to-day basis, I show you exactly the trade that I'm taking. Even Faisal in his equities analysis or his stock alerts, he tells you exactly what he's talking about on a day-to-day basis of what positions he wants to take. All right, let me see here. How's everyone doing in the chat? Are you guys liking the analysis so far? Just hang tight, and I'm gonna get to my larger time frame analysis of where I think Bitcoin is going to bottom in the next few months, and then how I see it mapping out into the next few years. Okay, and then we'll talk about what happened with the whole Goldman Sachs conversation and whatnot. Okay. All right, so all right, everyone's doing well. Hit the thumbs up, folks. I would really appreciate it. It helps more and more people see what kind of community that we are. We trade pretty transparently. We show you guys our analysis every single day. So this is the kind of information that we put out. All right. Okay, awesome. So another thing that I wanted to discuss is the whole, Goldman Sachs conversation, right? Goldman Sachs recently had a call with their investors, and they talked about, cryptocurrency can be a conduit for illicit activity. And they talked about, a lot of Ponzi schemes. And in 2019, $2.8 billion in Bitcoin was sent to currency exchanges from criminal entities. This is all BS, okay? I agree with that, right? I agree with the notion that, yes, Goldman Sachs doesn't fully understand exactly the notion of what Bitcoin is trying to become, or the ethics of what's happening in government printing money, or these assets are at all-time highs versus the real economy suffering. Okay, but the fact of the matter is, all right, I'll tell you guys this honestly. Okay, I have friends who I went to college with, and they're on Wall Street, and they tell me honestly that Bitcoin is an asset that investors have their eye on. Are they buying into it heavily? Absolutely not. Do you know the only reason that they're buying into it? They think that it's a potential, diversification of risk or reward into their portfolio. That's it. They have no idea what the hell it is, what it's trying to accomplish. The only reason why, they think that Bitcoin has value is that maybe, tomorrow, the day after, or next month, it's going to get, 10% returns or 20% or 40%, whatever. But they're also willing to say that Well, I don't really give a shit about the asset. If it hits my stop, I'm out of the trade. So these are not the people who are, ultimately going to drive up the price into the future. Okay, these are the people who may pile into the position, much later down the road. Yes, it could be a hedge against inflation. That's another thing that I'll talk some other day. Personally, I don't think we're going to see inflation first. I think we're going to see deflation and then inflation. I've talked about this in our equities videos on our channel. Make sure you go check these out. By the way, folks, Alpha Trades on YouTube. Every Sunday we have equities analysis with myself, Faisal, and then sometimes we bring Austin Ashraf. He's a former Citi portfolio manager, and he discusses his outlook on the markets. All right. So here's the thing, right? Bitcoin can be something great. Okay, it can be. Right now, unfortunately, okay, I'm going to show you guys this as my long-term chart. Okay, so let me go back and zoom out here. All right, so I have this chart drawn, and it's based on 3 different phases. Okay, my understanding of how the crypto market is, specifically BTC. Okay, specifically BTC. Now, the one thing I want to clarify is that crypto in no way represents Bitcoin. I think 99.99% of cryptos will probably go to zero. I honestly believe that. I really don't think that there's more than maybe 5, cryptocurrencies out there that are worth anything, more, than $0. But Bitcoin is not one of them. Bitcoin truly is unique and special in its own way. It is the first to market. It has the longest history of success, and it is doing something in a truly distributed manner that most other currencies are not. Currencies meaning, cryptocurrencies. Okay. So when we look at the history of the market, let's just say the last, 9-10 years, there are 3 phases that I divide the market in. Number 1 is the phase 1, the early adopters. Okay, these are the people who got in, as early stage developers. These are your Hal Finneys, of course, your Satoshi Nakamoto's, very, very early investors, right? Even Chamath, who's a Silicon Valley, early Facebook investor, right? He got into this area right here, okay? Then there were the phase 2 revolutionaries and builders. These people are the ones, around 2013 and 15. They thought that Bitcoin was this amazing asset and, it could truly be something unique someday, okay? Then they started, obviously, maybe creating these big mining industries. They started actually paying more developers to build the Lightning Network. They started developing on-chain metrics. They started building wallets, your hardware wallets. They started investing in exchanges like Kraken and Coinbase and Abra and all these different exchanges. And then your phase 3 are your degenerates. Okay, and I don't mean this in a derogatory way, but these are your traders and speculators. If these people got wiped out of the market, they mean nothing to what phase 1 and phase 2 people have done for the entire ecosystem. And guess what? Okay, I'm actually one of the phase 3 people. So I don't mind calling myself, a trader or a speculator or, a gambler when it comes to Bitcoin price. But that doesn't mean that I don't believe in Bitcoin. Here's the thing about the crypto community that I truly dislike. People get their panties in a wad every time that you say something negative about Bitcoin or its price. And this is so freaking annoying because every time that I try to have a reasonable conversation, right, people just get up in arms about, okay, well, you don't know what you're talking about, or Bitcoin is going to be worth, 10,000 or 20,000 tomorrow. And, here's the sad part, right? These are the people they're going to get wiped out of the market because they're so freaking bullish on the price that ultimately they will feel the pain if and when the market itself is trying to rid the phase 3 traders and speculators. And the only way it can do that is if price dumps from here down further than this $3,600 level, or at least back towards this $3,600 level. And God help people if it goes below 3,600 or 3,100, because that means that, let's just say, on a weekly basis, I've stated that if you just turn on the pivot simply, Okay, the S1 pivot on the weekly time frame, all right, is right now around $2,400. Do you really think that after the 2 or 3 years of hodling that they've done, once price goes from here down to $3,600, you think that a lot of people will still hold? I mean, I can guarantee you that a lot of people won't. And here's the thing: if you look at the on-chain metrics data for what happened during this March drop-off, you can go to on-chain metrics or news.bitcoin or coinmetrics.io, and what you will see is that in this March area right here, these were people who got in less than 6 to 9 months based on the UTXO uh, data. Okay, so you can see right here, a majority of the volatility came from UTXOs 6 months old or younger. All right, so here's the thing. In March, when you had this big drop off to $3,600, everyone from back here, so June 2019 or so, more than likely they sold right here. And the bigger professionals in the market actually probably collected, and then they drove the price up. But guess what happens, okay, if the professionals still do not have enough asset that they feel comfortable with? Well, they're going to pressure the price down. And remember, folks, don't ever question how much hedge funds and institutions can drive an asset price down, because they can literally destroy entire assets, companies, and economies if they really want to. Okay? With the help of the government, with the help of the media, professionals, hedge funds, institutions are more than capable and willing to do whatever it takes for the greed of, their ability to control a majority of the float of the asset that is lying around. So I never ever question their ability to pressure the price down. And it's not even that I'm speculating in the idea that, oh, well, whales are out there and they're just trying to dump on retailers. No, that's not even the case. The price is literally showing you that that's been the case for a long period of time. After the 20K high, right, we put in this low right here of 3,100, put in a lower high of 13,900. We put in this higher low right here, right? This was supposed to be our higher low of 64.10. But then we put in this lower high right here, right? So high, low right here, higher low, right? Actually, I think I have a better chart to show this. Let me see here. I think I have a better chart, so hang tight for a second. All right, so here's the better chart that I was showing you guys, right? So we have the all-time high, the first low that was put in, which was this base of the descending triangle, and then the low that was put in on 3,100 in December 2018. Then we had a lower high right here as per this all-time high, and then this higher low as per this low right here. Then a lower high, another lower high, another lower high, right? So fact of the matter is, all we've really done over the last 6 to 9, or actually the last 12 months now, is create consistent lower highs. And in this structure right here, if we're simply looking at this thing right here, this is a bearish pattern, which is that this is your previous high, lower high. This was your low. This is your lower low, another lower high, another lower high, and you might get another lower low. All right. Sorry for all the abbreviations and stuff on the chart and the higher lows and the lower lows. I know it can get confusing, but the only thing that you need to pay attention to is this big sort of descending parallel channel that's been defined for the last 3 years of Bitcoin's life. The last 3 years of Bitcoin's life, all it's really done is it's shown you an all-time high, it's shown you an aggressive low, it's shown you another lower high. Maybe the 64.10 was supposed to be the higher low, but then COVID came in, and then you put in a lower low, right? So now what we see is potentially another sell-off developing. All right, because here's the thing. Okay, let's go to this chart right here. All right. Okay, so here's the thing. If you look at the current price action of how in January we took the stair steps up, okay, so we took the stairs up kind of like this, so we call this taking up the stairs, and then taking the elevator down or jumping out the window, right? Same thing right here. Take the stairs up, take the stairs up, take the stairs up, and then start taking the elevator down or jump out the window, okay? This is just a saying, fun saying that we have in the markets. But it's very true because what you typically see is this, very steep incline grind right here that you see of price moving up right alongside a trend line. And then once that trend line gets breached, what you typically have is this kind of, lower high trend line right here developing at the top. And then you see a sell off and a massive sell off. And we're kind of developing that right now as we speak, right? We saw the breach of this trend line, but again, we climb back up. Finally, a real breach of the trend line, but then we might come up a little bit higher and then start rolling over again. Okay, so this kind of fractal is showing you that, all right, well, things already look like, the trend for the last month or two has been broken. We're already near a critical top where, there's a lot of miners who are selling. Volume itself was showing you that there's more sell side volume coming up here. OBV inflows was showing you that there's not enough money coming in to actually drive up the price. So it's actually retail FOMOing in at the top and buying the top from the professionals. All right. So Randy Lee says the last dump was due to COVID. Isn't that quite a unique event? Yeah, I mean, that's very true. Listen, events themselves don't matter, right? If an asset truly has conviction from a lot of buyers, okay, why didn't it stop here or here or here, right? Or why didn't it just stop right here and then start being driven up, right? Because that means that there were more sellers than there were buyers. That's the reality of looking at a market. It's just supply and demand, right? So I can't look at it any other way. If the price is showing you that it's going up or down, it's showing you that, hey, I'm doing this. It's not about, how much price is, going down versus how much it's going up and, what is happening due to COVID and whatnot. Price is literally showing you that, holy crap, we dumped, 50 or 60% in less than 48 hours. That's very dangerous, right? I mean, if you're trying to consider Bitcoin an asset that's supposed to be, your alternative financial system, or, they see people want to see Bitcoin as, reserve or an alternative to the US dollar or fiat or whatever, you can't be doing shit like this. Okay. So this is why I say that Bitcoin has a long way to go. However, it will still be successful, in my opinion, in the future. But first, what we need to do is these phase 3 speculators and traders need to be weeded out of the market. All right. And then the way they're going to be weeded out of the market is that if we break below this pivot, so if we break below $8,100, which is the pivot right now, okay, on a weekly basis, we're more than likely, in my opinion, going to head towards this S1 level. I have a deeper target of about $1,200, which is the high of the previous, November 2013 run. All right. And if we hit that, we could still be bullish. I mean, the next 5 years, 10 years could still be amazing for Bitcoin. I think the dangerous, point of Twitter and most of these hodlers, the way they sort of, aggressively tackle or attack any idea that questions Bitcoin's price ability to, keep going up. These people are the ones who don't understand that assets could still be bullish even if they come down to these levels. And, in the next 5 years or so, then we can keep going up. All right. So, the fact of the matter is, like, I don't know how to explain to people that your definition of thinking that, the asset Bitcoin is only successful if the price keeps continually going up is a complete falsehood. That's because you think that the success of an asset is only defined by the success or, the trajectory of its price. And that's not really fair, right? That's not fair because you're putting immense pressure on only the price itself, but you're not seeing the development behind the space. You're not seeing how the world itself is being redefined, maybe to allow something like Bitcoin to re-enter as a legitimate asset, as a legitimate part of the portfolio. But it's not going to be the case over here when you see this kind of volatility on a week-to-week, month-to-month basis. When you see an average volatility in a span of a year going up and down 84% like that, that's not something that is truly attractive to people who are thinking about putting their pensions in or thinking about, investing their retirement funds or their net worth for stock market diversifying into crypto, right? So in my opinion, I still think we can make it to 2,400 or this $1,200, $1,300 marker and still be bullish. Okay, so let's check some questions. All right, Philip says he wants it to fall so much it shows. Okay, I don't think so. I mean, again, I'm shorting, I'm longing, I'm a trader, right? I don't really care what the market does. All right. Randy Lee says, wasn't that because of the domino effect? All stops getting hit. Yeah, that was because of this, the domino effect. You're right. Philip says, fill your bags at the lows, eject all stupid plebe and moon with genius on board. I guess so. Let me see here. I don't know if that's an insult or what, but I guess thank you. Spit It Out says, Twitter is a cesspool like 90% of YouTube channels in this space. This is a welcome exception. Yeah, I appreciate that. Thank you. Jay Raz, what's going on? Very wise. This is what I always tell people. Yeah, listen, the smart people who actually think outside the box and realize, wait a second, I think it's a dangerous form of thinking that Bitcoin's price is only seen as successful only if it keeps going up. Like, that is a ridiculous idea if you think that Bitcoin has to just keep perpetually going up from here and only then it will be successful. That means you're the one who's greedy, right? You're the one who's greedy because you want it to just keep going up. I mean, so am I the one who is wrong for telling you the truth that, hey, we could go down and you may want to save your money or maybe short the market or be a little bit more careful in terms of your portfolio? Or are you the one who's, cancerous to the space and perpetually yelling at people on Twitter, just telling them that you're so dumb for thinking that Bitcoin is going to go down, further, or last time to buy at 10,000 or 9,000 or whatever, right? So really ask yourselves these questions, like, why is it that people are so aggressively attacking folks on Twitter or YouTube at the fact that whenever we start talking about, I'm shorting Bitcoin and I think it's going to go lower, and they start attacking you and say that, all right, well, this person is dumb and watch when, Bitcoin goes up to 10,000 or 12,000 or whatever. You think like, if Bitcoin goes to 10 or 12,000, it's just going to go randomly like a rocket ship and I'm never going to be able to take the trade and I'm not going to make money. It doesn't matter. If I'm shorting the market, I'm already technically spot long, right? Because I already have Bitcoin that I'm trading with on derivative exchanges. So that means that I already have a position in the market that is going to appreciate with the price of Bitcoin. Yes, I might take a loss with my short position, but it doesn't matter. My Bitcoin's price will appreciate against the US dollar. All right. Let me see here. So when will we moon? All right. So going back to that, okay. Here's the thing. All right. So if we're looking at this on a weekly time frame, okay, all I did was I grabbed this movement right here from this 2013 high all the way to this 20,000 high. And all I did was I said, well, let's just say we have another drop. Okay, we have another deep grinding drop, maybe into the next few months. It might be even faster, right? So this thing right here, let's move this down further. This thing right here could be something like, something like that, where it's a very sharp drop, and then we start pushing back up. Well, that could get our price, up towards 274,000 or so by 2024. That's, again, if we're looking at what happened based on this kind of movement on the way up, right? So all I did was, let me show you guys exactly what I did actually. All right. So I just said, let's grab the bars pattern from here all the way up here. And let's just simply put this from this key high right here we're seeing. You could also look at it from, let's just say this key high that we had at the all-time high, right? And we're saying, okay, well, maybe from here, we're just going to keep continuing up. I don't see that as the case. This is why I'm still thinking that we might have another break to the downside towards that $2,400 level, maybe, $1,300, $1,400 level. Because I personally think that if we make it down to those levels, then we have effectively pushed out everybody from the phase 3. Because remember, the phase 2 people, right, they got in all the way towards 2017 March, which is around $1,200 of the price of Bitcoin, right? And so then after that, this is all when the hype came in. I mean, I'm sure you guys remember the second half of 2017 was insane. Everybody and their grandmother was talking about Bitcoin. Whether you go to a barber, you take an Uber, you know, you talk to some dude at McDonald's, they were all talking about, hey, have you bought Bitcoin? Have you bought Ethereum? All the way over here. And guess what? These people are either still maybe holding or hodling, or they got in somewhere in this span of time over the last 2 or 3 years. And then these people will only be pushed out of the market when the pressure really builds up, right? And the prices drop again towards 3,000, towards 2,000, towards $1,500. Okay. And then all hope for these people, in my opinion, will probably be gone. The true people who believe in Bitcoin, who will be holding, are the people from phase 2 and more than likely phase 1, and possibly even some people from phase 3, right? So the people, if they hold down the way towards 2,400 or $1,200, $1,300, these people are not going to be selling anytime soon. They're going to be holding all the way to 50,000 Bitcoin, 100,000, maybe even 200,000. But I still think that this is going to be a larger case of, you know, pressuring the prices down, looking like, you know, more so like distribution over the next several months. And then once we get that final spike in capitulation down low, then we can start moving back up. And again, this goes, by the way, this moves towards the same S-curve adoption that we've seen in different technologies and innovations. If you guys are not familiar with S-curve adoptions, the TV, the electricity, internet, all the mainstream products that you see that are uniquely, very famous now, have this kind of adoption curve to it. It's called the S-curve adoption curve. Okay, Bitcoin is operating in the same way. If you look at the S-curve right here, you can see Bitcoin is doing the same thing. I think Bitcoin, if it gains more adoption, let's just say right now it has 1% of the overall adoption of the world, even if it gets to 2% or 5%, more and more people recognizing Bitcoin at lower prices is better than people recognizing it right now. Because right now, more people are thinking that, well, this is just too expensive, I'm not going to buy it. Well, who knows? Maybe when prices come down here, they may buy in and more people start adopting it. More people holding or hodling it means that there's less volatility in price. Okay, so you want to get the traders and speculators out of the market. And for that to happen, you need a bigger capitulation down. All right. Now, how is that bigger capitulation going to happen? Well, I've talked about this this indicator right here by Charles Edwards. It's called the Bitcoin production cost. All right. Let me see here. Let's go to the daily and let's turn on the production costs right now. Okay. The production costs are measured by the average miner for Bitcoin and their total costs that they have. So electricity, here's how the costs are defined. Okay. It's electricity, hardware capital expenditure, bandwidth, wages, rent, insurance, all that stuff is factored into the price of production for Bitcoin. And right now, okay, I think the average cost is somewhere around $15,700 or so. That's a total cost, okay? Electricity being the highest. Obviously, for some people around the world, if you live in Venezuela or Iceland, where's some other countries where they had cheap electricity, maybe even like some upper parts of Canada, right? In those cases, if your cheaper electricity mining costs are down, right? That means that you could potentially sustain these costs being lower than the average total production cost. So you could still keep mining. But remember, there's a lot of miners who are already at a loss because their production costs are much higher, okay? And on top of that, guess what? The Bitcoin halving just happened. So while pre-halving, they were getting paid 12.5 BTC, right? Their reward. Now they're getting paid 6.25 BTC. So what is the average miner going to do? or they're going to sell more Bitcoin to be able to cover their costs. Okay. So as the prices go down, more and more miners are going to be at a loss. So that means more and more miners are going to have to sell their Bitcoin, right? Because they have to cover their cost of production. And so if more miners sell, remember, miners control a majority of the supply, okay? A majority of the supply. So if miners start selling, okay, and there's not a whole lot of interest from, the average buyer. And remember, retail does not create, floors, right? Retail does not even drive up the price. Retail helps create tops because they're effectively buying into what the professionals are selling. Okay, so retail is definitely not going to create a floor for the price. The real players that are going to control and create a floor for price are the professionals and the hedge funds and the institutions, right? And so why would they create a floor for price at 6,000 or 4,000 when they could buy it at $1,400 or $2,400? And you're probably thinking, well, if it's going to go to 2,400 or if it's going to go to 1,300, why don't they just dump it all the way to 1,300 or I'm sorry, 1,000 or $500? Well, you can't do that if there's not enough supply out there to actually pressure the price down. That means that if they were to pressure the prices even lower than this area right here, that means these people in phase two have to capitulate too. And do you really think that phase two and phase one people are actually going to sell their Bitcoin? I don't think so. I think the only people who are going to sell are people who bought over the last 2 or 3 years, who are the real speculators in the market. All right. And I think mining capitulation is going to cause that. And like I said at the beginning of this video, okay, I think mining capitulation is slowly already happening. You could see right here, the hash ribbons have already started their miner capitulation cross right there. All right. Okay, so is there any questions so far? I know I've covered a lot of information. I know there's a lot going on. I also want to check on the S&P 500. So you can see S&P 500 pushing up a little bit. All right, and I would probably say Bitcoin is pushing up a little bit too. Let's see here. And let's turn off this indicator right now. All right. So if we're just looking at the local technicals, even folks, we see the 1 hour time frame right here. We've crossed above the pivot. Okay. So chances are we might get up towards the R1 pivot. I don't know how likely that's going to be because here's the thing, right? We still have this little period of consolidation right here where we got rejected previously, right? Rejection, and we're coming up towards that again. So we start getting rejected right here. Chances are we might start rolling over back into lower 9,000s or maybe even higher 8,000s. All right. Let me see here. EOS looking dead. I know, that's what I'm saying. I think a lot of these crypto companies are probably going to go to zero until we see that real capitulation in the alt space and even Bitcoin going to 1,000 or 2,000. I don't know how else you can get to capitulation. Miners have to sell, majority of these cryptos have to go to zero, and then you'll see the massive exodus of people leaving the market, people calling it garbage, people saying it's going to go to zero. And then you start buying Bitcoin. That's what I'm going to do at least, because I believe in Bitcoin, right? I would rather have some of my money, some of my asset diversified into Bitcoin. Okay, so whenever I say, hey, I think Bitcoin is going to go to $2,400 or $1,300, people think that, oh man, this guy's just bearish and he doesn't know what the hell he's talking about. I do. I've been trading this market for 11 years. I've seen a lot of bubbles pop. I've seen a lot of different cycles go from 0 to 100 back to 0. All right. So don't think Bitcoin is any special. Everybody and their mother thinks that whatever asset that they're buying, they think that's the special asset. Just like everyone thinks Bitcoin is special and it's going to go to, it's definitely going to go straight up from here. It's going to go to 50,000 and 100,000. Of course, you don't want to look dumb, right? I get it. But the fact of the matter is the markets will make you look dumb quite a bit. And that's okay. That's just part of the game. Okay. I showed you guys, right? For the winners that I have, today we made 18.56% on our call option. Literally in 2 hours of trading, we made 18%. Again, These are unleveraged positions, right? But we also have days where the market doesn't go as well, and we see, you know, losses like this kind of position, negative 79% on the put option, right? Or sometimes you see even better days where you see something like this. You made 360%, you know? So this is the thing, right? You have to be able to take the market in an ebb and flow. Okay, you're gonna have good days, you're gonna have bad days. You gotta be able to manage your risk though. Because if you cannot manage your risk, right, meaning that you don't preserve your capital, you're not gonna be able to grow it. You can't make bigger successful trades that will yield you more money and more percent if you don't have money to begin with, or you liquidated your account because you went, you know, 100x leverage because you were thinking that, you know, today or tomorrow price is going to dump or pump or whatever. Manage your risk, control your emotions. Okay. All right. Are there any questions right now? What coins are you looking at? All right. Well, I'll talk about those. So one of the coins that I'm looking at is Tezos. Okay. I really like Tezos. One of the females that I listen to, her name is Meltem Demirs. She has talked about Tezos for the last year or two, and I finally did research into Tezos, I think 2019, early 2019, and I really like their project. Okay, I really like their project. All right. Romain Prevost says, how can your position be unleveraged? Because, okay, so if you understand options, options can move aggressively in any given day. They can literally double, triple in price in less than 5 minutes. That's how options work. Okay, there's no leverage, quote unquote, when it comes to these kinds of SPY options. All right, I mean, you can have margin, but that doesn't change your percentage. Okay, so no, it is not cross by default. It is literally actual percentage gains or percentage losses. So that means that, you know, let's just say if I had, you know, a $10,000 position, I just made 1,800 bucks on this position. All right. Let me see here. What other coins am I looking at? Okay, so here's another one. I like Link as well. All right, so I've talked to my community about Link. I still think from here, and again, not financial advice, I still think from here, Link could make it to its range high right there, anywhere between 450 and 475, and then start to roll over. Okay, so I want to pick up Link. Guess where? At the range lows. You can see we hit the range low, bounced up. Hit the range low again, bounced up. Hit the range low again, bounced up. So it seems like someone is buying way the heck down here, which is around $1.50 up to about $1.75. So this is where I want to be buying. And this is your free tip of the day, where this is where I'm going to consider buying Link. All right. Let me see here. Some other cryptos that I'm considering. I mean, for now, Link is there. Tezos is there. One of our members, Chaos, he actually told me about UBT. I don't know that much about it, but I did some research. Seems like a pretty good project. I don't know if I'm going to buy it yet, but it's just something that I have my eye on. So it's this Unibright thing. So, you know, this is going to be something that I consider, but I'm just watching it for now. I just have it on my watch list, and that's pretty much it. But those are really the only 2 or 3 coins that I'm watching, to be honest. You know, Tezos, Link, Bitcoin, definitely, and maybe Ethereum. You know, maybe Ethereum. I really like Ethereum because I believe in Vitalik. I think he's a really smart individual. And sometimes, you know, even in the stock markets, right? Sometimes you want to bet on companies because you believe in the founder, the management, and the vision of the founders, right? So I'm actually okay with betting on Ethereum for the things that it's done, but also Vitalik because I think he's a freaking Russian robot genius, I swear. You know, so I really don't mind betting on Ethereum for those purposes. All right. Let me see here. Let's see. So Fastl just put out an equities update, right? So again, this is the kind of information that you get in the Advantage side. He just put out 3 more stock alerts. Okay, this is the kind of information that you get in our Advantage community, folks. So do come join, you know, Cryptosomniac website, products page, and buy the Advantage subscription if you want access to all this analysis, access to all these lock channels. All right. Let me see. Is there any question? Tesla. Tesla is possibly one of the calls, but I don't really like Tesla where it is right now. I do believe that it's a very great company, and I still think in the future it's going to go much higher. But here's the thing, okay? Again, go watch our videos on the Alpha Trades channel. Hit the subscribe button. Hit the thumbs up button for this video. One thing that I'll tell you guys is, whether it's myself or Faisal or many other smart people that you will see on my Twitter feed, a lot of these people will mention that the stock market overall is severely overvalued in terms of, companies like Tesla, companies like Google or Amazon or Facebook or Apple, these bigger tech firms, or even a lot of, assets like, let's just say even AMD, right? I love AMD, but I still think AMD over here is well overvalued than, what it was, I guess, like pre-COVID. Okay. I really don't think the same kind of production, the same kind of sales, the same kind of earnings growth is going to happen for companies like AMD or Google or Facebook, given that we are in the, still the present stage COVID era. I think the world itself is going to be shifting in a way that a lot of people are not going to recognize. I think that China itself is going to be a big problem for the US. I still think that, America is going to be a big powerhouse and you don't want to bet against America. But I think there's a lot of, near-term risk for stocks, near-term risk for things like Bitcoin. Shopify, yes, you're right, Matthew. Another great stock, another great pick. I think we actually had Shopify as a pick that Faisal mentioned that he was trading a couple of weeks ago. Okay. And even our other member, right here, he trades stocks regularly, right? I think he was talking about like Shopify way the heck back here in the middle of April. And we made this big move to the upside, all right, from here to the upside, 33%. Even if you're talking about now, you're still up 16%. All right. Matthew says he picked up a Shopify in 2017. Oh man, that is amazing. You basically got like crypto-like returns, man. That is incredible. So you basically, let's just say you picked up somewhere over here, right? April. Yeah, you're up like 900% or so. That's incredible, man. That's an amazing pick. I think there's so much money to be made in the stock market. This is why I love trading it. This is why I tell people every day exactly what I'm doing in the stock market in the advantage side. I love trading options. I think Faisal does as well. Faisal is really good at knowing the fundamentals of a company. He's truly, one of the best analysts when it comes to analyzing companies. You guys should see some of his research that he puts out. Let me show you guys one of the stocks of the day, right? Here's one of his research pieces on Old Dominion Freight Lines. This is a trucking company. He does all this research and this data, and he compiles it into a newsletter. Okay, and then he puts this information out only for the Advantage members. So this is the kind of information that you get from our community on a day-to-day basis. All right, so hit the thumbs up, folks. Come join Advantage. You can go to the Cryptosomniac website. The link is also below. There's also a free Discord link below. If you just want to come hang out in the community, the Discord link is below. All right, or you could go to cryptosomniac.com, hit the products page, join the Advantage subscription, and come trade with us. Come see the kind of information that we put out. Come see how we trade in the market, the kind of analysis and information that we have every single day, right? I make these Zoom sessions and analysis for our Advantage members on a day-to-day basis. I put out updates of what I'm seeing in the market. I make free videos. I make more analysis for our Advantage members on a daily or hourly basis. So this is the kind of information that we provide for our community. All right. Well, that's it. Thank you so much for watching. I truly hope you guys enjoyed this analysis. Please do hit the thumbs up. It really helps our community to be more visible, to gain more exposure in the crypto community. I really hope you guys enjoy this analysis today. And until then, Y'all take care. Join our free Discord. Come hang out with us. Come trade with us. And I'll catch up with y'all soon. All right. Cheers.